Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I'm here with Walker Deibel. He is the best-selling author of the book Buy Then Build, and just an icon in the space. A lot of you guys know who this is, but I'm looking forward to the conversation with you today, man. So thank you for being here.
Ron, thanks so much for having me. I love your show. It's been too long since I was here before. Thanks for the invitation.
You know, it's funny is we usually can bring people back every 4 or 5 months, and then you said something or posted something on recently, and I was like, man, I don't know what he's up to, but why has it been so long? It's been almost 2 years. I looked at it. You were one of my first guests that, like, you kind of made the show because I got you as a guest, and everybody's like, man, you got Walker on there, so I ought to get on there too. So everybody, it was a lot easier to get cool guests. I even had some of the people from Never Split the Difference. One of his coaches came on, and like part of my pitch is like, well, I've had Walker Daible on there. You should come and join. So thank you for helping make the show. I just want to give you the
A
kudos
lot of
there.
a lot of people think you made the show, but you and I know the secret,
Yeah,
Ron.
the secret is, it's who you're associated with. It's the power of social, what do they call it? Social proof, right? I just
Yeah.
show them a
Yeah.
picture with me, I do a screen capture with you beside me, and I'm like, "Look who I hang out with." But, no, thank you for being here. We're gonna learn a lot today. The joke's always, "Hey, you were born and then you ended up on a show about mergers and acquisitions. How in the hell did you end up on this show? What got you to where you are today?" So anybody that, for God forbid, they don't know who you are, kind of fill them in on the, like, kinda who you are and what you do.
Yeah. So, Ronald, I mean, the reason that I ended up on a podcast for M&A at the end of the day is because I'm a really bad entrepreneur. Okay. And we'll get to that. But, basically, in a nutshell, I started buying companies. It'll be 20 years next month was when I initiated my first official search for a business. That word didn't exist.
Mhm.
My girlfriend's mom thought I was unemployed, and so did I. But eventually figured it out and sort of navigated this like opaque and fragmented industry and like got my first deal. Ran that as CEO for 7 years, and the whole time being like, no, like entrepreneurs, like I hang out with entrepreneurs, they don't understand what I'm doing. Like they think I'm playing a different game, but I'm right there with them. Like, and so it frustrated me that they didn't understand what I was doing. After I sold that first business, I used the proceeds and went out and bought six more, and during which time I took every private market certification program out there. I was a stockbroker in my prior life, so I knew the public markets. And I really felt like a book needed to be written to sort of introduce this concept to entrepreneurs. Spent 4.5 years writing Buy Then Build, became a Wall Street Journal, USA Today bestseller. It was adopted by a bunch of universities. Next thing I know, I'm keynote at MIT University. Built an accelerator to help people do it. Today, I've probably acquired 9 companies of my own outright, probably another 2 dozen as an investor. I've consulted on over 300 acquisitions, and I could talk some more, but I think you get the point.
And you have a team running acquisition labs, right? You actually have a team teaching other people how to do this based off all this knowledge you've gained over the years and experience, so
Yeah, with Acquisition Lab, I mean, Acquisition Lab's interesting. Like the whole concept was how do we build the Y Combinator in the space, right? Like no one was really doing this. There was some courses out there, but there wasn't a real program, in my opinion. You
right.
you talk to a lot of people, okay, but it's one of these where I was like, let's anchor in world class education, and then really like we have the only vetted program out there that I'm aware of. We tell 70% of our applicants to the acquisition lab that they're not a fit and we're not going to take their money and let them in. So we're very specific about who gets in, and we're not trying to be rude. I just have an allergy to these Facebook groups with 1,000 people in them and only one person's actually going to do anything
Yeah.
because it just means everyone gets lost. Right. So there's a misalignment to me. We've got a really strong group, but
Yeah. I used to own a training center for training people on how to do real estate. I actually owned the local RIA at the same time, and it was heartbreaking that this industry statistics for information products and courses and stuff like that is 3%. So 97 people that go through do nothing at all, and 3% do something, and 1 or 2 of those 3 maybe do something significant. And,
we've got about percent close rate from getting accepted to actually buying a business is about 30%
it's
at the lab.
incredible. It's
Yeah.
10x. The
Yeah.
industry average. I got to the point where I had other people teaching at the Entrepreneur Center for teaching real estate, but if I came into the room, our classes were free. The first few classes we do, we had like a 6 or 8 week series that was free. And if I came in there and you could, some people were taking it in 2 and 3 cycles. Like they would come back and take the same, like because there
Mm.
was week 1 was one thing, week 2 was another, and I would see them. They were in week 2 3 times now. If I caught you in week 2 on the second or third time, I made you get up the front of the room and teach it. And
I love
like, the fastest way to learn something is to have to teach it, so,
That's right.
some of the guys did
That
really well, and they ended up being teachers for us. Some of them I had to take back over, they were too nervous in front of the crowd, but we had a couple guys that were just really good at it.
that's awesome.
But I get it, man, so I like what you're doing, I like the pre-screening, and, I had a couple people I in my network where I was like, "Hey, I got Walker coming back on today, what questions you have of him?" And a lot of these guys are in that low down, no down, negotiate contract for, equity, all those type of programs that are asking stuff like that, like, that's not the right guy. This guy wants you to be bankable. This is a leveraged buyout, bankable type of structure. Yeah, he can do creative deals like the rest of you, but you gotta have some skin in the game. He can show you how to raise capital just like, a lot of these other guys do and stuff and bring investors in for it. And
Yeah, can I speak? I don't wanna interrupt you, I'm sorry.
no, go for
Go
it, man.
on.
I'd already kinda knew in my mind, like, that's not gonna be the kind of question he wants to answer.
Well, fine, and we can talk about it, but here's the problem. Like, even my marketing team is like, can you just, like, do a little talk on, like, how to buy a business without any money?" And I'm like, "No, I'm not gonna do that because that's the headline, that's the clickbait that gets the clicks, okay?" And, I mean, you can look at what the Google searches have been for the last 20 years, and, like, that's the term, right? It's
Right.
like, I get something extremely valuable for nothing? How do I make a ton of money with no effort and no money? And it's like, that's not this game. If you actually want to get from Miami to California, and I ask you, "Do you know what a plane is?" And you're like, "No." I'm like, "Cool. I can help you. Do you have a pair of shoes?" And you're like, "Or do you have a bike?" "No." "Okay, do you have a pair of shoes?" "No." "Okay, no problem. Give me your admission fee, and I'll teach you everything you need to get to California." And then you're then teaching people how to walk barefoot to California. Can you do it? Yes. Yes, you can. But what we need are people who are gonna succeed, and the people that are gonna succeed are not the ones getting set up for trying to get that outsized kind of gain, right? And the way that you get those deals, in my experience, is by being in the game and proving yourself and being the guy that's willing to sort of take risks that other people aren't gonna do, right? And then once you make that leap, you get those deals. But if you just go in and be like, I'm not a fan of that.
I call it unicorn hunting. It's like the unicorn in the startup space is like, you're
Perfect.
you're gonna invest in 100 companies, one of them's gonna succeed, and they're gonna be the unicorn that makes you $1 billion. Well, there's unicorn hunting in this too. You think you're gonna go in 0 down, no money down, no equity in the skin in the game, you're gonna have to talk to 1,000 business owners, and yeah, there are out there, like, you talk to enough people, you're gonna find somebody that needs your skills and willing to hand the reins over to you, but it's not gonna be easy, and most people, the average person, as a matter of fact, probably 80-90% of the people on this planet don't have the tenacity it takes to
Yeah.
get that no money down deal.
I would agree with that. I it's also Yeah, it's also, in my opinion, at the scale in which it's been spoken about the last couple of years, I actually feel like it's done tremendous damage in the industry. I feel like so many people are just getting their time wasted for people looking for that winning lottery ticket. And it's like, that's not how you actually get this done. So
Yeah.
just say I agree with you. If you like, but here's the thing is just going back to buy then build and sort of the foundations, like it doesn't take much to get a lot. Okay. And yes, I'm gonna say you need $100,000 and some people listening are gonna be like, "Oh, well, Jesus, might as well like shit gold." Can I say that on the Yeah, but the thing is like you can buy one of the largest 4% of companies in the country for $100,000 out of pocket. Like that's not crazy. And the thing is like when you go out and you buy these, just to switch the game for a minute, if you go out and you buy a middle market company, 50 to $100 million, even if you use none of your own money, okay, you're still paying for the search and probably the diligence and everything else. So you're at least out of pocket 100,000,
Yeah,
even though you have no money in the thing,
right.
right? There's no cash infusion in the thing, but you still found the deal and brought it in as I guess, an independent sponsor in that version of reality.
People don't get that, right? They don't understand that there's in the mid-market, you're gonna need a quality of earnings report, right?
Oh
And
yeah.
10 grand on the cheap side,
Oh,
If
yeah.
100 grand could be right there if you're talking about a real mid-market company doing $30 million a year and how that has switched their booking system 3 times in their history. You're
Yeah.
gonna really spend some money on some of this stuff, and people don't get that. Now, I'm not gonna discredit the fact that it's possible. It happens, and it happens often, but a lot of times it's because the people I know that are getting it done are doing more of a partials, right? They're coming in and taking 20% of a company, working for equity, and maybe buying the whole thing over time, but they're coming in and doing what they call contract for equity or, WIBOs, work-in buyout, that type. They're working and proving themselves in the beginning, and it's not a
Mhm.
true acquisition on day 1. You're not acquiring and taking 100% control on day 1.
I mean, the only times it's ever really happened in my experience are, when someone dies and like the CPA calls a friend of mine because they're like, "Hey, don't you do e-commerce or whatever?" Because this guy just died in his Porsche with 100 grand in cash in the trunk and a pound of Coke. Real story. But and, they got the deal and it was but here's the other sort of, like, kinda big myth that has taken over the space, if you don't mind, it's related, which is there's also sort of this allure to seller financing. And the truth is when you go back, okay, like, seller financing is what we did kind of I'll definitely say definitely prior to 2013, and it was still, like, really happening a lot, like, pre-2016. But the thing is that, like, loans for acquisitions were not issued by the SBA, not for a business acquisition with no collateral, with an entrepreneur that hadn't made any money before. Like
Mhm.
like no personal balance sheet. Like I'm 30 years old or I'm 20 to 30 years old. I haven't done anything yet. I'm trying to buy this business and it doesn't have any collateral and I don't have any collateral. The banks were like, "Good luck." And deals couldn't get done without seller financing. So seller financing was the solution to not having debt. During that time, you would have a lot of conversations and you wouldn't get anywhere because they would figure out, "Oh, this guy doesn't have the money." And so it's just like chunk, chunk, like you were just removed as you went. And then every once in a while, you'd find that person that was like, okay, kind of to your point. I like this person. They're willing to work. I'm willing to help them get the equity. I'm willing to sell them partials as we go through time or whatever. And then, it really wasn't until January 1st of 2016 when the SBA went full tilt and they're like, "Okay, look, if you're a United States citizen or green card holder or whatever, and you're buying a US-based business, then we're gonna go ahead and we will lend you up to $5 million, up to 90% of the total transaction. All you need to do is sign this personal guarantee and you're good." And it completely solved the problem, and more businesses were not only able to transact, but the thing was seller financing kinda went the way of the, wagon wheel for a while, and it's been sort of reintroduced, and the truth, Ron, is that I don't know that I've ever even done a deal with seller financing. I mean, very, very small. Like, I've had some deferred payments and things like that. The bank will give you the money.
Right?
For me for me, okay, and this is gonna like, a lot of people are gonna be like, "What?" For me, I don't like owing the seller anything. I want them fully paid out and I want them owing me, okay, for the first like 30 to 60 days because and then I'm going to let them write off. I really don't want them having a right to my business. Like, "Hey, like how are we doing?" Like is I hear business is slow. Now they're all worried that like I'm going to miss a payment or something or god forbid I do, right? Or whatever. Like it's like I can work with the bank. I can do that. And I believe, but I cannot prove two things. One, I believe that our federal government came out and said, okay, we are going to allow these loans for this business transaction to occur because it's a total of like 5% of the US economy is owned by baby boomers and needs to change hands in these small businesses. Can you imagine what would happen if if like half the economy like needed to be rebuilt? It's massive.
It is.
And the second yeah, and the second thing is that I think that banks are the ones that have sort of reintroduced and re-pushed seller financing to the point that now the SBA is really promoting it again as of December. But like, but I think that they were the ones really pushing it because they're able to take the seller and put them behind. So in a bad situation, right, where maybe the buyer is under a little bit of stress, okay, they're able to say, okay, stop paying the seller because I'm going to increase your debt service coverage ratio, and now my reports look fine, right? So the bank will give you all of the money, right? And for whatever reason, people seem to really want to hold the seller, tie the seller down in terms of like seller financing, but I think it's way overstated.
I've Out of all the horror stories I've heard over the years doing this podcast, interviewing people, some of the worst ones were seller finance deals where two cases, a seller finance deal and where the seller was still the leaseholder of the real estate.
Yeah,
And one of them was horrible. It was a mechanic shop. He didn't like the growth strategies the new buyer had implemented,
right.
and he would go
Perfect.
in and because he still was the he owned the building, he was renting they were renting from him. He felt he could come in there and talk to the employees that he wanted anytime. It's his building, he can come talk to them anytime. And there was a loyalty issue, right? You're the new CEO, the other guy's been there. It was sabotaging him. He was having a hard time getting his employees to do what he wanted to do to grow it the way he wanted to grow it because the other guy
Yep.
still had so much influence over the business. So I can get that, right? I can get that sometimes you don't necessarily want the previous owner hanging around.
If you ever bought a business before and you buy one and you've got a seller note and the transition and they own the building or whatever, it sucks. Like, I will just tell you, like, a week in, you'll be walking down the hallway and you hear some people whispering in one of the offices or something, and you'll look in and it's like the owner and the former owner and one of the employees, and they're whispering. Guess what they're whispering about? It's you. So you need to download that person's brain and get them out of the building because this is now your business. And I think tying that seller to your business is not something that's going to be a benefit long term.
The way to avoid that is that deep rapport building before it starts and just really not doing deals. If you're gonna have the seller involved, you just gotta look at him and go, "Until I pay him off, he's kind of a partner. Could I be a partner with this guy?" And that's something you can't just decide overnight. That takes time. I think partnerships in business are more stressful and more it takes a lot more out of a human being to be a partner in a business sometimes than it takes them to be married because if you think about it, you spend more time very often with your business partner than you do your actual spouse, right? You get to see the spouse on the night and the weekends and 40, 50, 60 hours a week if you're running a business, maybe more. You're there shoulder to shoulder with the partner. So, yeah, I would I still look at caution when the previous seller is gonna be involved. Is this somebody that could really be a compliment to me and be a true partner in this business because technically they are until they're paid in full, whether you want to admit it or not. Like, I've got full
Exactly.
control. Like, yeah, you got full control, but they still have the hearts and souls of every employee that's worked for them for 30 years.
Yeah. Yeah. Well, there's truth in that. I think that it's one of these where it's a challenging time for employees.
Mhm.
They're trying to prove themselves to you as the new owner. They're trying to figure out the shakeup that's kind of happening. But yeah.
I have one question here. You
Oh,
know
can I
Yeah, go ahead.
you said so I remember what I was gonna say, because you said something about the building rapport with the seller, okay?
Yeah.
I was going through what I figured out was, whenever I would potentially be interested in a business, I would sort of set everything aside and kind of just talk. I would kind of just have a conversation with the person, and if it's the easiest way to move on, right? Like, if I didn't like them or I didn't relate to them or like I didn't like the culture, I would just kind of move on because there's plenty of deals out there. And it's one of these where a good friend of mine bought a company and he didn't like the owner. And he was working through due diligence and he was trying to work with the guy. And I was like, what's going on? He's like, I hate this guy. Like, I feel like he's lying. Like every time I talk to him, there's like I feel like he's lying. And then like I'll look at something else and then I'll like kind of catch him in like a little cutting the corners of the truth sort of situation. And I'm like, what are you going to do? And he's like, well, this guy is clearly the problem. So I just need to get him out and then I'll be able to fix it. And I was like, oh, okay, that's interesting. And I hadn't yet bought half a dozen companies or whatever. I maybe had one or two. And he bought the company. And what the lesson I learned from it was that a business is sort of made in the image of its owner or its founder or its whoever is managing it. Yeah, whatever what it's made in that image. That's who is setting the culture. And so what happened was that all of the employees, rather than helping him and helping the company and whatever, just sort of gave him enough rope. Okay. And within 6 months of acquiring the business, he almost went completely personally bankrupt. And I mean, he edged out of it. And like it ended up being like a good, hardship story because no one died and no one went bankrupt. But man, it was close. And there was months there where he was just in despair. It was terrible. But on the flip side, I had someone call me yesterday and they said, hey, we just want to talk to you because we received an offer for our business and we just need some consulting on like if we went to market or like, is this a good offer or, what's the deal? And ultimately it was the purchase price was fair, but the terms were in such favor to the buyer that I was like, well, if you formally went to market, your terms are going to get better, like by a lot. But what I would tell you is like, just as an example, these terms are so good for the buyer that I would buy your company right now on this call with this LOI, right? And this was my second or third call with them, so I already knew them, okay?
Right.
I liked them. They were a referral to me from a friend of mine. Like, yeah, like, we just really hit it off, and it's a couple that owns it, and so we had an opportunity to get rapport, and then they showed this LOI to me, and I went home last night, and I was just thinking about it all night. I'm like, "Am I gonna buy this company? Like, I really might." I just had a lunch meeting about it, and I was like, "Hey, should I buy this company?" And we're like, "Yeah, maybe we should." But I don't usually go 24 hours and I'm still a maybe. So, I think but like it might really be a yes. We'll see. But to your point, Ron, I mean, if you trust the seller, that like diligence for me happens so much quicker. And I think a lot of that has to do with I think that first time buyers, they're really overly weighted in analysis. They really want the spreadsheet to tell them that there's no danger. And I think that anyone that's done this a number of times, just like in real estate, it's sort of like if you've never done a fix and flip, I mean, you like give yourself a headache 18 times over with the spreadsheet trying to figure out what's going on. But after you've done 2 dozen of them, you're like, yep, this one. When you call your buddy and you're like, I made my offer and you go, right? Because you just know how to do it. And you don't get too hung up because it's all about execution.
I get what you say about you said that the CEO sets the culture. A red flag with the business owner should be extremely more alarming than a red flag with almost anybody else or anything else inside of the business because of what you said. I evaluated a short evaluation. I was probably only 3 calls into them, an engineering firm out of Dallas.
Okay.
And during one of the calls, we're on a Zoom call, somebody come in and gave the guy bad news, and he literally kicked the trash can across the room, screamed, cussing, did total exorcist. And it hit me that that was the 2nd or 3rd time in 3 calls I seen him blow up, like, really
I
blow up.
got it.
And I just started
Yeah.
talking with him. I said, "Look, this isn't the right business for me. Like, our financials are great." I said, "I get that." I said, "You understand, though, you've created a culture that anybody that would work for you and with you tolerate and need the way that you manage.
Yeah.
It's a
Right.
small shop, less than a couple dozen people. I don't manage that way, and I don't know how to move people who are used to being in that environment to the laid back Zen type of mentality that I wanna be in." And this is still when I hadn't realized I don't wanna be a, 60-hour a week operator. I was still looking for one for me to operate. I just sometimes you just gotta look at it and go, "This the leader creates the culture, and if this is the way they behave," like your guy that he had the red flags, and then the guy kinda does micro lies on everything, then it probably means most of his employees are probably micro lying to him. He sets the culture, he sets the tone. And, just like I'm a big believer that any red flags you see with that individual, the owner, other than the fact that they may be tired and burned out and wanting to retire, but red flags as far as integrity, management style, or those type of things, that's huge.
Yeah. I'm sorry. I was just reminded that I recorded a video for my YouTube channel this morning, and I was talking about something like this. So I just pulled up my notes to be like, what was it? And I was talking about, it's sort of like the 8 reasons why you want to buy a more expensive business than a low priced business, which
Mhm,
sounds counterintuitive, but it was like all the reasons why. And one of them was, it was just sort of identifying the transaction, like the age old transaction gaps between a buyer and seller of any asset, right? The buyer just wants to pay nothing and the seller wants the highest price possible. And the first order thinking tells you, well, this is too expensive. And in business acquisition, it makes a lot of sense because the purchase price really is correlated directly to the risk that you're taking, right? I mean, that's the downside risk. But then, the educated thinking is you tell me the price and I'll tell you the terms. But then the experienced investor, okay, understands that fair prices, of course, have a range and that the ones at the high end have all of the things that you need that actually like de-risk your acquisition. So, a lot of times I think that we take that real estate adage of you make money when you buy into business acquisition. And I actually don't think that's true. You make money when you sell on a business. Like you never talk to an entrepreneur and it's like, "Oh man, we raised at the lowest valuation." Like it's all about the exit. Like that's the number that matters, right? I mean, that's your thing. So, and real estate it's one of those things where the asset is going to have a pretty fixed top value.
mhm.
And then it's going to continue to grow between 1 and 3% annual, but it's not like this like you can double the value of that building in the next 24 months or something in a best case scenario, whereas with businesses you really can. And it's typically the ones that trade at the higher prices that do that. And I think to weave it back to what we were talking about, it's sort of like savvy operators that run really well-tuned businesses tend to be intelligent and organized people, and they're not going to sell their most valuable asset just because like you call them and say like give me 100% seller financing and I'll buy this from you. Like that's not how that's going to go down.
Interesting, there's a friend of mine who I meet with regularly, he's been on the show before, he's done 15 or 20 of these creative deals and put no money down, but he does, 5 meetings a week, 6 days a week, and that's how he gets those kinda deals, and they're all
Yeah,
work for
right.
equity type of, structures, most of them anyway. He's taken down some full companies, but usually he's bringing partials in, and, he said, it's kinda funny, what you're pitching is you're calling these businesses on the no money down deals or these creative finance deals. You're calling a business owner and you say, "Look, I'm interested in taking over your business. I know you've been doing it for 30 years. I've got this brilliant idea. Why don't you hand it over to me? I'll run it better than you ever run it. I'll pay you payments out of the profits from it, and you don't get any money on day one. How does that sound to you?" In essence, that you'll never say that directly, but in essence, that's what you're saying on these no money deals. And, yeah, sometimes it happens and sometimes it doesn't, but you better have deep rapport, so deep rapport with it that they'll give you that business before they sell it for a profit to somebody else because they really think you're the safe pair of hands, you're the person. You really gotta play your cards right, and it's a numbers game. But, like, we're going back to what we were talking about is going out there and sourcing deals and figuring it out. I don't wanna discredit the fact that all the money has to come directly from you too, because I know people right now who are raising incredible amounts of money, and they're taking down some big deals now because they were able to do that raise, and,
Yep.
there's an art to that, so but yeah, you may need $100,000, before you get started. It may not have to be yours. It could be, an investor, it could be a seasoned partner. There's some guys out there that are willing to sponsor deals and take an equity role in it. You're gonna give up equity, and you're gonna have to take some direction because those guys that they're putting their money in it, they wanna have a little bit of say in what's going on too, but, yeah, it is possible.
I bought the domain searchfund.com a number of years ago, and I just had it. And it's one of these where I just finally pulled to, like, there's a company called SIG, Search Investment Group,
Mm.
and they do a lot of that sort of like down payment piece, but they're very sort of traditional search fund oriented in their profile and all the rest of it. And I was going to start that business. And then they sort of did right after I started the lab. So I just was like, great, you guys do that. Wonderful. And I won't do it. But there's sort of a gap in the market. And now that we've got like over 600 searchers at the lab, I think we probably have over 100 full time people searching for a business right now. And I'm like, okay, I need to start pulling money. Yeah. So I made some partnerships and we are going to invest in individual deals. And so, the point of searchfund.com, which if you type it in today, it's not there.
Right.
But, the point of it is that we're actually going to pay this down payment for people who want to do these SBA deals, but like don't have that kind of capital.
They've been through
But
your
again,
course, they've been vetted by you, you know they're gonna be a great operator, and they found a good deal. Like, that's a good
prob-
solid investment. The a lot of people, if you've never been an investor, the key to any investment is asymmetrical risk, right?
Mhm.
Minimal risk, big return. I think this is better than I was in the real estate space for a long time. Minimal risk, down payment, that type of stuff, or sometimes, I was the creative funding guy for real estate in our area. My rule is the seller's always the bank, right? When I bought them, I tried to convince the seller to be the bank to me, and when I sold them, I own or financed most of the houses I sold because the seller's the bank, right? And I didn't get that for myself. I hired some mentor, and he said it, and I adopted it. That said,
Yeah.
this space, the asymmetrical risk is huge. You could get in for a little bit of money, and with some creative in ingenuity and some doing multiple acquisitions, you could have an exit beyond anything you would have, initially imagined if you haven't been in the space. This opens There's a whole arbitrage game to the inside of this that a lot of people don't understand. There's milestones along here that you go from buying at 2x, 3x to being able to sell at 2x or 3x if you run at the same level, to being able to sell at 6 or 7x because you crossed a certain milestone, to be able to
Yeah.
sell at 10 to 12x because you got over the $10 million EBITDA milestone that woke up the giants.
Ron, like, it's a little strange because I mean, I think I could die in peace because I have met enough readers of Buy Then Build
Mhm,
that have acquired, I I would say billions in transactional value, like just from people that I've met and
mhm,
talked to. And I met this one individual who he bought an e-com business for like $400,000 on a website called Empire Flippers.
yep,
They do a really good job at these sort of like sub-$1 million like online businesses. And he grew it in less than a 3-year period. He grew it and he was like, "Hey, will you help me sell my business?" And I was like, "Let's talk about it. Let's look at it." And I sort of did a valuation and I was like, "Okay, we could sell this for like 24 million. Like no problem. I could sell this for 24 million with one hand tied behind my back." I guess the only problem would be like bank financing when it grows that fast, like could be a little, but like I know the private lenders, like we can get this done. But then I started asking him more questions like, "Well, why are you selling?" And like, blah, blah. And I found out that he's selling because he felt like he had to, because he was running out of inventory and the inventory investment was so big and so substantial that he couldn't keep feeding it. And I was like, okay. And I introduced him to someone in private equity
right.
who gave him a loan for his inventory. It was no problem. He took some equity and got a whole bunch of cash and then they doubled it again. Ronald, they doubled it again. $48 million company valuation, and he bought it for $400,000 in less than 5 years.
Wow, I catch myself
Those are
negotiating myself out of deals too occasionally. I had a
yeah,
guy
yeah,
come in with a commercial roofing company, similar problem. Commercial roofing problems have a cash flow issue because most of the commercial roofs are paid for by insurance companies. It can take them 90 to 120 to 180 days to pay. They gotta buy all the supplies and pay their labor before they even do the job or as they do the job. So there'll be 2 or 3 jobs into it, and, like, I don't have money to go get the materials to do the next job. So a guy called and said, "I'm gonna sell this thing. I'm gonna run into cash flow issues." And I thought it was because he wasn't managing right. When I dug into
yeah,
it, it's because they had so many jobs lined up, they couldn't afford to do them. So I introduced him to
yeah.
some people that would loan him the money, and as I kinda negotiated myself, I should have got a finder's fee or something for the money. But I was like, you don't have a business that you need to sell." He loves what he's doing, and,
Yeah,
the guy I introduced him to has it and took care of him. It's not cheap money, but, like, when you need it, you need it.
yeah,
I occasionally, when you get in that's part of this building rapport, though. If he ever needs to sell, I promise you he'll call me back. When he really wants to sell again, he'll call me back, and he'll be bigger and probably better ran by that point too. Because my goal when I get on the phone with any business owner is, what are they trying to accomplish? What is their goal? His problem wasn't I gotta sell. His problem was I don't have the cash flow and the cash reserves to
yeah.
handle the growth in front of me. I was like, that's not an execution of like, hey, I gotta have an exit plan right now. That's a problem with, like, there's just certain things you don't know that you don't know.
Mhm.
There's people out there that'll happily fund you.
Yeah, I think it's one of these where People like I've probably brokered the sell side about 100 deals,
Mhm,
and it's where I've really slowed down. I don't I enjoy it a lot, but it's also one of these things where it's not exactly aligned. It's like now that I have this sort of like statistically significant experience in sell side,
mhm.
I'm not as interested in the incremental lessons anymore. And it's not exactly as aligned with what it is that I'm building, but it keeps me sharp. And B, I have access to tens of thousands of buyers. So like I just had a call with a potential seller, a couple hours ago. It was a referral from a friend and okay, let's talk. And to your point, Ron, I spent the whole beginning of the call like, listen, we're just gonna work on your goal. Okay. And if I feel like I can help you achieve a realistic goal then that aligns with what it is you want, then I'll tell you. But the truth is like, I don't care if you want to sell your business or not. And then I spent most of my time trying to talk them out of it.
Yep.
But then if I can figure out what their real goal is, and I'm like, okay, this actually aligns with what I know we can get in the market, then it's pretty easy for me to take that on because I can help them, I can achieve their goal, I can usually beat it, and then we're satisfying, the infinite demand by buyers for good businesses with realistic sellers that want to sell a business.
You've been in this space long enough, you've been around a lot of people who are buying companies and selling companies and stuff. What are some of the key indicators? Like, I know in real estate, I got to the point where I could walk through a house and I kinda knew who the buyer was. If I wasn't gonna rehab it myself,
Yeah.
we did wholesale a bunch of our deals off. I could walk through and go, "You know what? This is a house that Mark's gonna take or John's gonna take." I knew exactly, like, this requires too much work, but and I knew how to adjust my bids because I knew what they would pay and how to make money on it, using their math. There's gotta be a skill set that you have now because 'cause you've interviewed and been with and people that wanna be in your program. You've seen people successfully close. You've interviewed business sellers who I use the word interview, but you've talked to business sellers who wanna sell. What are some of the key things you look at when you see these guys? Let's start with the buyers that they're gonna do well in this. Is there some key traits or trainable skills that people can work on to be really good at buying a company and getting a deal done?
Okay. So I mean, look, it's one of those where on the buy side, okay, well, okay, I'm sorry, my brain's going 2 directions in terms of how to answer this question.
I did ask a
There's sort of
dual question to throw you off there. Let's start with the
yeah,
buyer
yeah,
side.
yeah. Well, the buyers, it's more like I'm either representing a very specific company.
Mhm,
So to your point, it's like I know Mark's profile is gonna buy this one, and so I'm looking for Mark.
mhm.
And, like, I do that really well. In terms of at a mass level, in terms of, like, there's a billion people listening to your podcast now, downloading this episode. Thanks so much for having me on again, by the way, Ron.
Take
But it's
taking
like,
that into being.
what yeah, what would I sort of say to that? What I would say is like, the easy answer is repeat buyers. I mean, people that are in the game, I mean, those are the ones that they just reek of confidence and speed to closing. Footnote, except when they don't, meaning like these big private equity companies that are like, oh, well, that's legal over there. And legal's like hammering you, and it's like, man, you guys aren't saying the same thing. It's just exhausting. And they come in with their binder in the last day and say, like, we got to retrade. It's like, okay, I'm not doing that with you. But the thing is like, if I were to, if your question weren't aligned with like first time buyers, like people like just being like, I'm really attracted to acquisition entrepreneurship and like the opportunity that exists. And there's $10 trillion occurring, like transferring in the next 7 years, and I just want to get my opportunity. What I would say to them is it's sort of like the people that are willing to learn and the people that are willing to do, and really the people that are willing to take calculated risk. And like you can't like the magic is not in the de-risking. It's in figuring out what is it that you bring to the table. Because we can sit here and look at a business and look at all of the things. And, Ron, I think I can look at a business and I think the biggest, like one of the biggest reasons why everyone keeps coming back to all the sessions that I run in the lab is, and I've been told this many times, they're like, I see you walk through a business and you pick up the risks and you pick up the growth opportunity, you pick up exactly what I need to look at. And we just go through deals and we'll spend like 40 minutes on each deal. And it's like you look at, okay, right here, am I like you need to identify the risks and be comfortable that you're going to be okay being the one to navigate that if it goes that direction. And then you look at the growth opportunity and you figure out, am I the one that can go that direction? The thing is we all sit there and look at this business as if it's like a car driving from point A to point B, and we're just going to jump in and replace the driver. Once you jump in, that car is going wherever the hell you're driving it, right? And you might be driving it right into the ground. You might be driving it up the mountain. Like it's 100% you. Everything that happened before you got behind that wheel is slightly irrelevant. It has velocity, but it has nothing to do with the future of the company. Very limited. So, it always says like in big bold letters, like historical performance is no indicator of future results. And yet that's we sit there and like grind through the Excel spreadsheets trying to prove to ourselves that that's not true. And it's exactly what's going to happen. So the trick is you have to figure out what you bring to the table. You have to look at what the growth opportunity is that that business provides. And then you need to be able to align those two things and make that leap of faith.
I love that, and I love the fact that it aligns with something I tell people all the time. The leaner the profit margin, gross or net, the better you better be at running that company, right? When you buy a
Absolutely.
company when you build a company, it's yours to figure out, does it have product market fit? Am I gonna grow it? You got a high risk of failure, but it's yours to figure out. When you buy a company, it's yours to ruin. And there's something to be said about, like, jumping in the driver's seat and trying to, like, keep it on course. I tell people, it's like, I was like, "What is the first thing I should do after I buy a company?" I said, "Probably nothing for the first 60 or 90 days. Just talk to the employees and figure out what they're doing and say, 'Hey, help me keep this going down the same railroad tracks it's always been on, and help me not
Yep.
derail this for the next until I understand it.' Once you understand it, then you make your adjustments." And I often tell people, ask everybody in every employee at the company what they would do, what they would change, and find which one of those changes align with the ones you kinda had in your mind and start there, because people are
Yep.
extremely religious, resistance the word I'm looking for. People are extremely resistant to change, and if you're changing
Yeah.
something they wanted to change, they're more on board with it.
Like, I'm gonna say something totally unfair, but, like, I'm somehow inspired to share this thought, which is you're asking, like, how do you know what a good like, when I look at sort of a new every cohort for the acquisition lab that comes in, I'm looking at everyone's profile and I'm reading how the interview went or whatever, and whenever I look at them, it's sort of like I look at people that got an MBA, like, 10 to 20 years ago, okay? And they have some level of, like, former military experience. And by the way, I have none, okay? But the thing is, like, I look at them and I'm just like, all day long, like, those guys are just gonna execute. I mean, they know how to jump out of the plane, they know how to jump out of the boat, they know how to, like, just run down the desert and make it happen, right? They put themselves in situations that are terrible. And if not, it's, drill, and they're organized and, like, they just know how to execute. And if they have that MBA and it's another 10 years past, the experience is there, right? And now they're just looking for that opportunity to build their own. So it's a completely unfair statement, but it's like if I see the MBA and military experience, I almost just like move on to the next person because I know they're okay. I know they're great.
And it's unfair for me to agree with you, because 'cause I'm prior military intelligence at that, and I have an MBA, right? So, yeah,
Thank
you're
you for
right,
your
you're
service.
100% correct. Those are the best guys, but, yeah, I'm
Yeah.
I'm a little bit biased on that one. Let's go back to kind of what do you got going on now? I seen a deal go by, you like, you had a story or a video you popped up saying you attempted to take down or made a $200 million offer, and I thought, "Man, is he broke through the barrier? Is he actually going after big game now?" That's obviously I don't know what they consider mid-market, but I think that might even be slightly above the mid-market range, right?
I mean, it's mid market is like 25 to 250
Okay.
million, I think, something like that. I don't know what I think. I mean, look, I think that it's interesting. Like, I think that there's a lot of emphasis put on things like size of the deal and quantity of deals done. In other words, like to me, like Steve Jobs didn't need to own 18 companies all at once. Like, yeah, he left Apple for a little bit and like did Next when that was called,
Yeah, I
and
think
then he Pixar, but really it was like that was kind of a distraction and he came back and did Apple. Like it was like I do one. Bill Gates did Microsoft and like yeah, I mean people like you look at the best ones and like not everyone is Warren Buffett. So like why do we all feel like there's a member in the lab who I was like, "Wait, I'm confused. Like I hear you talking and it just doesn't line up. Like did you close on a business?" And he goes, "Yeah, I bought 16 companies last month." And I was like, "No, you didn't." Like, I asked a follow-up question and I got a smoke screen and I'm like, Cool. I'm not I don't know." But, like, it was one of these where no one who is actually buying a company bought 16 companies last month. Like, that's not happening, okay? So, I don't mean to be making an example of one of the members of the lab. It was one of those situations where I was like, "I don't know what's going on with you in that case," but, obviously very competent individual. But the other thing is, like, if I say, "Yeah, I bought a company that was 200,000,000," people take a step back, and it's like, "Well, in my opinion, Ron, it's almost a bigger deal and potentially a better deal to buy that $1 to $5 million business and own 100% of it. When you buy a $200 million company, you are in real estate. It's the difference between buying a single family home that you own the whole thing of, or maybe a small multifamily, like a fourplex or something, and you own 100% of it versus going out and buying that, luxury 250 unit, I'm making numbers up, $70 million kind of building. It's like,
Yeah, now you're in the syndication, you've raised money from 20 different people to do the down payment, and banks are involved, and you'd probably get a bigger check out of selling the little small unit than you do out of selling the big,
yeah,
multifamily because it's the same thing as what they call that when you're doing a startup and you have your capital stack or your, I'm thinking of the word here, but basically yeah, I have a company we sold for 500. I actually seen this guy. I almost had him on the show, and then I realized he was not an acquisition entrepreneur. I was gonna have him on here because of exit. His lawyer stopped him. He's like, "Yeah, we sold the company for $500 million." And I said, "Well, off air before we get anywhere, what did you make?" He says, "I cleared 6.5 million." I was like, and he's like, "No, it's great.
yeah,
It's my life." Like, "Yeah, I get it, but it's still horrible." You could have cleared that
yeah,
with an SBA loan acquisition easily, right? And it
exactly.
would have been a lot less stressful, and you wouldn't have to, travel, worked your butt off for 80 hours a week for the last 10 years trying to raise capital and keep the thing alive so you could get to the exit. That sounds like a horrible deal to me, and he was puzzled that I'd even say that. But it is, if you go over a certain number, almost have to bring in extra people for risk, that
Yeah,
asymmetrical risk, right? You don't wanna even if you had $200 million laying around, you're not gonna risk that portion. That would be a significant portion of anybody short of even a billionaire's portfolio. If you got $1,000,000,000, $200 million acquisitions, 20% of your holdings. So,
yeah,
you're gonna bring out
yeah,
people in.
yeah, and I think what the point of that video was, and I mean, I've toed the line many times on the sort of like 20 to $100 million transaction, and this one just happened to be bigger. But the point was like, I know how to do it. I've just been so selective in doing it that I haven't done one. And
Right.
I think that the bigger thing is that I think that if I were to do it right now, I don't know that I could take it on. Like, I still have a portfolio of companies. I still run the lab. I'm working on another book. Like, all of the things going, all of the things kind of, all the plates, all the spinning plates run. It's sort of like, if I were to do that, then I'd kind of have to like start ignoring and offloading everything else, or kind of clean up and then do one big one and then start to build a portfolio that direction. But the concept here is that at the end of the day, there's really like three routes for the acquisition entrepreneur that like look very different from the outside, but are actually exactly the same with different economics. And the first one is that sort of like traditional search fund, right? Where it's like, I'm going to do an SBA business acquisition, but, like, I'm not gonna put any money into it because, like, probably I'm a recent MBA grad from a very promising university, and I can get some financing and put a board of directors around me and give them a lot of equity and, like, not have a huge downside risk, but get a lot of upside gain from my lack of experience. The second is I'm experienced and I'm competent and I'm willing to take a calculated risk for my own thing. So I'm going to like put some skin in the game, take an SBA loan and like buy a company myself. There's a petition out right now that they're willing to go up to like 10 million. They're pushing that or something. Did
I'm
you see
trying to
that?
in the air. I wanna push them to do that, even if they have to drop right now, they guarantee a certain percentage back to the bank as a security, even if they have to go, "Okay, we'll loan 90% of 5, we'll loan 80% of 10," and I like them to go all the way up to the market. I'd love to see them do some type of product where they'll go all the way up to the $20,000,000 and they cover the gap between private equity, what they're willing to buy, in what
Yeah.
we're playing in, because there's a gap still, a big gap that's hard to
Yeah.
fill. And that $5
Yep.
million to probably even in some industries, it's lower, but in some industries, it's up to $20 million that the private equity doesn't dip down into. And even if
That's
it's like,
right.
hey, they'll fund up to maybe it's 50 million or 50% of a $20 million deal. If they're still bringing 10 million to the table, now you got to go raise some capital and bring some investors in and do some stuff. But trying to get
It'll
up
be
on,
easier.
oh,
SBA loan.
yeah,
Honestly, it'll be easier. But that even that first option, that SBA sorry, that search fund, traditional search fund option, they're going bigger than
mhm,
SBA, right? They're filling that middle space. They're going between, 6 and 20 to 25 kind of thing. The third one is that independent sponsor route,
yeah,
right? And that's where, again, you're putting in probably the same amount of money, if not a little more than an acquisition entrepreneur, like if you want to use that word for that, than that SBA buyer. And what they're doing is they're getting private capital, they're getting private equity, they're pulling the operation team together. It's more of a capital allocator kind of role,
mhm.
but they clearly are also going in as the operator. Okay. Or pulling in the operator team and being more of a private equity kind of role person and getting less of the equity in that instance. It's almost like the reverse, where an independent sponsor is sort of like, I'm the operator and I'm going to form the private equity company around me, as opposed to a private equity company hiring an operator and saying, look, we'll just give you 20% of this business to go operate it. So it's almost like reverse engineering that from the other direction.
Yeah, I've learned a lot about those spaces just by interviewing. Like, that's my thing now. Is if I have a group of people who I'm working with to help them acquire, of all things, cabinet making manufacturers, and they're talking
Perfect.
about raising capital. So I was like, oh, let me see. I got to learn about it. I can't answer your questions yet, but give me a couple weeks. So I interviewed a
Yeah.
dozen people who have raised hundreds of millions of dollars, and then I read and I study too. But it's the best thing to do is to like find somebody that's been there or in the muck of it already and go,
Yeah.
what should I expect? It's like I
Right.
love getting you on here and getting people on here that are just they're in the muck of this business and just look across the virtual, room here and say, what should I expect if I go down this path? What are the expectations of me? And then what are the expectations I should have of others? And
Yeah.
learn that you can either learn from your own mistakes or other people's mistakes. I just find it faster and a little more affordable to learn from other people's paths.
Yeah, that's how people learn. I mean, it's all about. I mean, I almost hate to use the word community right now, but it's like I feel like the biggest benefit that Acquisition Lab offers, for example, is everyone goes through an intensive. So it's like common language, like common tools, all that thing, and then you get a vetted group of people, make all these commonalities, but then it gets you out of your living room or out of your kitchen when you're sitting there by yourself trying to make one of the most important financial decisions of your entire life and career, and you're just sitting there isolated, and who are you going to talk to about that? And so I think that working through deals together is, really how you apply that kind of higher order thinking, because you're taking in information, you're out there doing it, but then you're also able to work with other people in the same situation. I
Brilliant,
feel
brilliant.
like
Yeah.
I feel like I really feel like people come to the lab to, like, learn from me and my team, but at the end of the day, I feel like 80% of it is really just being in this community of people that are trying to get it all done together, and we're there to help and support, but they don't know that coming in, but they
Yeah.
figure it out.
That said, you mentioned you're working on a new book, and I don't wanna overstep that because I swear you did such a good job on the buy then build, that if you wrote a book about grooming monkeys, even though I don't want a monkey and I don't wanna learn how to groom it, I'd probably buy the book just because that'd probably be the best book on grooming monkeys there ever was. What do you what
Thanks.
book are you working on?
I'm not ready to talk about
Okay.
that just yet, but I guess I would say is there's been a couple of very obvious books that I should write, and I've sort of done a light pass on those, and it was sort of like incremental and too related to buy then build, and I even went out and bought all the domains for those books, even when I bought buythenbuild.com. And instead, it's sort of like, we talked about like size and quantity, right? And the thing is I feel like one of the biggest mistakes that I made was I ran out and I bought way too many companies way too fast. Okay. And that's a conversation for another day. But the thing is that, like, there are better ways to sort of scale your business and use leverage in a way that can be of personal benefit without necessarily feeling like you need to go out and play the size and quantity game. That's so vague, but I'll leave it at that and sort of say it's gonna be that direction.
Alright. So, I was curious what that was, so we'll just leave everybody in suspense of what the next book will be, and since you mentioned earlier it took 4 years to finish the Buy Then Build, we'll just assume in the next 4 years there'll be another one out.
It'll probably take that long. I mean, with everything going on. I mean, I
That's
could get a
okay.
book done in a year now, but like, it's a heavy lift. I mean, you can't really do anything else to get the book done in a year. Like right now I'm reading, Adam Grant has a book called Hidden Potential, and that's what I'm reading right now. And like Adam Grant, he's not a perfect example because like he actually is a teacher at Wharton. But if you look at him, he blocks his year off in a 6 months and 6 months where he teaches. I guess he only teaches one semester, right? So it'd be 4 months, and then the balance of the year he's writing. But it's easy to be jealous of these authors that can spend the majority of their time authoring. But I would love to do that one day, and hopefully I'll get there. But too much to do in the meantime.
Well, you did such a good job on the first one, so I always recommend it to people. I like, you know, if they I think the only book I actually talked down about is the Harvard Business Review, and it's just I don't like the way they structured it inside of there. Other than that, there's a bunch of good books out there. After interviewing you, I went through and interviewed 40 I think 47, 48 authors on this topic. So,
Oh, awesome.
uh, number 1, it was low-hanging fruit. Almost every author wants to talk about their book and what they're up to, so it was easy to get them on the
Yeah.
podcast. And,
Yeah.
2, it's I can gain from you, and most of the time, I can gain somebody within an hour of the podcast, the majority of what's in their book, and a lot of times, I'll listen to the audiobook if it's available on speed before I get them on there, so I got to ask
Mhm.
in-depth questions, so it was fun. That said, I don't think anybody's put together a better one. I really don't, and I'm not just blowing hot air towards your way. I really respect what you wrote and what you have out there, and everybody should own it. If you're in this space and you don't have it, it's kind of the guide to making this happen, so
I mean, this is gonna sound so egotistical. Like, I went to this conference and, like, I was not speaking,
Mhm.
but it was all on M&A and, like, it was all small business M&A, right? Like, I walk in and, like, immediately I was among people. Like, people were kinda coming up to me and, like, I was having lunch with someone and they were like, "What's your name? What do you do?" And then I told him and he was like, "Oh my god, like, I read your book." People are saying, like, the buy then build, model. It was just like
Yep.
it was like my world. And I was at the bar afterwards with some of the people that I had met, and this guy was sitting at the bar, and he had this whole plan to, like, go buy a business, and he had this whole thing, and I was listening to how he was describing it, and he was sort of describing it in a way it was great, 'cause it was in a way that, like, as if I had never heard of this idea before. But then, someone that I was with was like, "Well, you read Buy Then Build, right?" And he was like, "What? No," and he had never heard of it, and he hadn't read it, and my first thought was, what the hell are you doing looking for a business to buy if you haven't read Buy Then Build? Like, it's like the fundamentals, man. And
Yeah.
again, like,
I
shame on me for having that thought, but it was just kinda like, how can you possibly be out actually trying to do this if you haven't gone out and picked up the $20 items that are, like, just sitting there to help you get organized? Like, that's not a good signal. I mean, Ron, look, if someone doesn't have $17 to buy a paper copy, there's always the $7 ebook, right? But if you want free, I've got over 100 videos on YouTube, and they are not BS videos. I mean, it is
it
frameworks.
is. Yep.
Well, go to buythenbuild.com. There's all kinds of resources. We're revamping the newsletter, and we already have pre-written a couple of our long form articles, and they're really good. They're really good. So
Perfect segue to where we need to be. We're above the hour already, so let's just do that. How do people reach out to you, see your content, find your book, and work with you if they wanna be part of the acquisition lab or, they got a business they want you to have you broker for them or whatever. If they wanna reach out to you, what's the best way for somebody to
yeah,
start that
it's
process?
real yeah, it's real easy. Like, so if you wanna reach out to me personally, LinkedIn is probably the best way to do it. Buythenbuild.com is a great place for free resources and, like, accessing all kinds of stuff, and hopefully signing up for our newsletter. And then, YouTube is a great spot for, like, hours and hours and hours of free information. And then acquisitionlab.com is where you would go to learn about that program. to see if you're a fit for that. And look, I'll just tell you, it's $8,500. It's lifetime access. There's 6 coaching calls a week after the intensive. And our goal is to get you to closing. So, the concept is if you are going to buy $1 million business, I mean, $8,500 is, Ron, it's rounding error
Yeah, it is. It's
for
right. It's right in there.
yeah, it's funny because when we do get, like, price point pushback, which is, $8,500 is a big check, right? It's like, "Well, hold on a minute." It's always just kind of like, they're not thinking about it, okay? This isn't a month-long program. This isn't like some coaching program, right, that we're trying to get you through. This is like a vetted community geared towards getting you to goal. I'll leave it at that. I'll leave it at that. We've had 2 returns requests in 4 years, and, one of them was the guy didn't know how to use Zoom.
Guy right now who doesn't know how to use a computer at all, he's got some great content, and he knows how to record himself, and he's got a TV show he does in his local town, but he's trying to set up his own podcast, and I really like the guy. He's helped me out in this realm, and so I understand that sometimes this I finally asked him, said, "Do you have a teenager around or somebody that really knows computers that can sit with us while we do this? Yeah, go find a 10-year-old because we can get this done a lot quicker." I appreciate
Sure.
having you here today. I think we covered everything really well. I think we should call that a show, man.
Thanks so much, Ron. I had so much fun.
I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT-enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.